Hey everyone, hope you're having a great day, and welcome back to Whiteboard Invest Crypto News. Let's dive straight into today's top stories shaping the cryptocurrency landscape. First up, Bitcoin's dumping, but what does it mean? Next, Bitcoin ETF bleeding continues. $106 million outflow in single day. Meanwhile, Ethereum ETF providers update fee and investment details in filings. And about Solana, it explodes with 30 million users and first ever ETF. Speaking of geopolitics, we're still updating news about SEC and crypto legitimizing. Finally, let's head to Memcoin, and we have some warning for you about its volatility. All right, dive in the details right now. Crypto analysts are warning that political-themed meme coins are likely to remain volatile, especially with the U.S. presidential debate coming up on June 27th. Coins like Super Trump, Strump, and MAGA, Trump, are being treated as speculative assets tied to the election outcome, which means their values could swing significantly around the debate. Recently, we've seen a lot of these political meme coins take a hit, with major losses across the board, partly due to rumors about a new DJT token on the Solana network. Both Biden and Trump are expected to talk about crypto regulations during the debate, which could impact these tokens even further. Meanwhile, influential figures in the crypto world, like the Winklevoss twins, have thrown their support behind Trump, donating $1 million in Bitcoin to his campaign. On the trading front, meme coin liquidity is at an all-time high, making trades smoother, but they still carry a lot of risks due to their volatility. So, what's next for Bitcoin? Right now, there's a whopping $11 billion in short positions that could get liquidated if Bitcoin hits $73,000. Now, when shorts get liquidated, it's actually a good thing. It's bullish, which means the price could shoot up even higher. But here's the flip side. If Bitcoin drops below this critical red zone, which is around $59,000, the long positions start getting liquidated, pushing the price down. It's like a tug of war. And with the leverage in the system building up as Bitcoin keeps moving, we're in for some wild swings. Basically, if Bitcoin breaks out above $73,000, we could see a massive price jump. But if it dips below $59,000, brace yourself for a drop. So the US Bitcoin spot ETFs have been having a rough time lately, with 6 straight days of outflows totaling $106 million on June 21st and $545 million for the week. Leading the pack in outflows was Fidelity's FBTC at $44.8 million, followed by Grayscale's GBTC at $34.2 million, and ARK Invest's ARKB at $28.8 million. Interestingly, several ETFs, like those from BlackRock and Bitwise, saw no net flow, while the Franklin Bitcoin ETF bucked the trend with a $1.9 million inflow. This steady stream of outflows has dropped the cumulative net inflow to $14.56 billion over 112 trading days, with total net assets for Bitcoin spot ETFs at $55.547 billion. Amid this, Bitcoin dipped back to $63,378, a level last seen 5 weeks ago, and has fallen about 12% from its high of $71,907 on June 7th, while altcoins have fared even worse. These outflows highlight ongoing issues in the crypto market, such as regulatory uncertainty and volatility, suggesting that the market still needs to mature and stabilize before it can gain broader acceptance. Several big asset managers have recently submitted updated proposals for Ethereum ETFs to the SEC. VanEck, BlackRock, Grayscale, Invesco Galaxy, and Fidelity are all in the game, with VanEck revealing a management fee of 0.20%, which is pretty close to Franklin Templeton's 0.19%. BlackRock hasn't announced their fees yet, but they're under pressure to keep them below 0.30%. The approval of the S1 registration statement is one of the last steps before these ETFs can hit Wall Street, and they might launch as soon as the first week of July. The SEC recently approved a rule change that lets major managers list and trade 8-spot Ether ETFs. Fidelity has already seeded its fund with $4.7 million, while Bitwise might see a $100 million investment from Pantera Capital when their ETF starts trading. Hashdex is also seeking approval for an ETF that mixes spot Bitcoin and Ether, shifting from their original Ether-only plan. Political decisions, as much as financial ones, have influenced the approval of these ETFs, according to analyst James Seifert, Meanwhile, investor Brian Kelly thinks Solana could be the next big thing for a spot ETF in the US. Bitwise has even started promoting their Ether ETF with a new commercial that can be minted on the Ethereum blockchain. If you enjoyed this video, don't forget to leave a like and subscribe. Your support means the world to me and keeps me motivated to bring you the hottest news updates every day. Solana is booming. With over 30 million monthly active addresses and a new all-time high, Solana's activity is surging. This spike coincides with 3iQ's plan to launch the first Solana-based ETF on the Toronto Stock Exchange, which could revolutionize crypto investments in North America. If approved, it would attract more investors to Solana, boosting its market presence. As of June 22, 2024, Solana's price is $135.58, showing positive short-term changes despite some recent dips. Its 24-hour trading volume is 132.561 million, with the highest weekly volume hitting 235.742 million on June 18th. Solana is currently the largest cryptocurrency by market cap at $62.69 billion and the fourth largest blockchain with a total value locked, TVL, of $415 billion. With growing institutional interest and rising active addresses, Solana's future looks bright in the crypto market. Consensys is still battling it out with the SEC, pushing for clearer rules in the cryptocurrency world. They're not backing down, even after the SEC wrapped up its Ethereum 2.0 probe without providing clear answers on how Ether should be classified. Laura Brookover from Consensys emphasized that they need definitive guidelines for digital assets. Adding to the mix, the SEC recently approved Ethereum spot ETFs, which has stirred up even more debate about whether Ether is a security or a commodity. Meanwhile, the SEC is still looking into Consensys MetaMask wallet for possible securities law violations related to swap and staking features, signaling potential enforcement action. Consensys has questioned how these new ETFs, which were approved with Ether being treated as a commodity, affect ongoing investigations. This whole situation underscores the murky regulatory landscape for cryptocurrencies, and Consensys is committed to clearing things up. The Nigerian SEC has rolled out a new program called the Accelerated Regulatory Incubation Program, ARIP, to speed up the registration process for virtual asset service providers, VASPs. This move is part of their effort to update regulation to keep pace with the evolving crypto landscape. Back in March, they bumped up the registration fees for VASPs significantly, which stirred up some controversy, but aimed to ensure financial stability in the sector. Now, with ARIP, VASPs have a 30-day window to get registered, or they'll face prosecution. This all comes under the leadership of Motimi Agama, who's known for his crypto-friendly stance, has taken some strict measures, like pushing for the delisting of the Nigerian naira on crypto exchanges to combat currency's devaluation. Despite the Central Bank of Nigeria lifting its ban on banks operating VASP accounts, microfinance banks are still restricted from handling crypto transactions. Nigeria's crypto market is booming, with around 22 million active crypto users, making up 10% of the population. The government's moves a tough regulatory approach as they try to balance growth with control in this fast-growing sector.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.